Hey, what's up guys, welcome back to Trade, and for this video I'll be showing you guys a very simple and easy 5-minute scalping strategy that can help you to get very high win rate just by using only 2 indicators. So anyways, before we start this video, let's try to hit 500 subscribers. It helps me a lot and it only takes the click of a button, and then make sure to sign up for FairDesk to get up to $600 deposit bonus when you use my link in the description. So anyways, for this video I'm going to show you guys the indicators that you'll be needing. First up will be your TASC. So you're going to search TASC and you're going to click on the second one, which is your MADH moving average difference. So you have this purple and green looking thing that looks like a MACD but it isn't. And next up you'll be using your cumulative delta volume, and this will be the 2 indicators that you'll be needing, and we won't be using any trend because just by this tool we can basically tell the trend, and you can obviously add your own market analysis into the strategy. But before we start this strategy, it's important to know what do these indicators mean. So first off, I'm going to change some of the styles of the indicators. For this, we're going to change the color scheme to momentum, and the rest you can keep it. I'm going to make the 0 line white in color and make it a proper line so I can see the difference carefully. So basically, when it turns from green to red, you can see that the price is kind of going down, and when it turns from red to green, you can see that price is going up. So this basically is trying to tell us the momentum of the market and how is the trend kind of going just by using this momentum. But although maybe it turns from red to green, we might still be in a downtrend. You can see from here we're in a downtrend and it turns from red to green. So it doesn't tell you the general trend, but it tells you what the buyers are currently doing. So now next up, you want to look at your cumulative delta volume and understand why it is. So if you guys did not watch my previous videos, the cumulative delta volume is basically the amount of buyers and sellers, and this is important because the buyers and sellers are the one that are pushing the price action up and not indicators, and this is very important to note. So anyways, let's get on with this strategy. So what you want to do is you want to wait for the indicator to turn green twice above the 0 line. So what do I mean by twice? So let me find an example. So let's look at this right here. So we have it cross over, and this is the first time that the indicator turns green above the 0 line and it turns red. So what you want next is for the indicator to turn green again, and you want to wait for the CDV to be green. So when it turns green, the CDV must be immediately green for you to take the position. Same thing for when the thing is going red. So we have a crossover here. This is the first time it's turning red below the 0 line, and then it turns green again, and then you have another red line. So this is the second time that it turns red, and then you want to wait for a CDV to be red for your confirmation. So I'm going to use let me find an example. So let's zoom back into the previous time frames, charts and everything. So let's see right here. So here we have our first indication. So let's zoom in on the chart. Here we have the crossover of the green to the red and then back to the green, and when it turns green for the second time above the 0 line, you want to look at the CDV, and here we have a green signal. So this candle will be our entry right here. So same thing as all my other videos. For the stop loss wise, we are going to be using the recent swing low, which is on this candle right here. So stop loss will be right below, and we'll take a 1:1. So for the take profit, you can take a 1.5, but for this strategy I like to take a 1:1. So here we have another crossover on this candle right here. But however, these are the type of trades that you must avoid when using the strategy when it is close above the 0 line. You want to wait for the second signal to be either above the 0 line or below the 0 line. You don't want to wait for a signal to be below the on the 0 line, sorry, because you don't know whether it's ranging right now. So let me show another example. So here we have a very big prominent move up. It's your first green signal, and then this is your red before your second green signal appears. and this will be your confirmation to go long on this candle right here. Stop loss will be right below the swing low here, and we look on the CDV, you can see that it is green, so there's a valid position and you want to take a 1:1. So yeah, that is it. Now we're gonna look on the short position. How do we take short positions? So we have the crossover of the red below the zero line. This is your first red signal, turns green, and it turns red again. So this is your second signal. So in this case, you're gonna look at your CDV now, and CDV tells us that the candle is red, which means that there are sellers in the market. So we're gonna enter a short position right there. Stop loss will be right above the swing high, and we'll take a 1:1. So there we have another win, and here we have another signal. First crossover, first red, green again, and second red with our CDV being red in color here. So we're gonna enter there. We're gonna have a stop loss right above, and we'll take a 1:1. So this is kind of a long trade, but it's still fine as long as it's a win. But in this type of trades, maybe when it turns green, you can maybe want to exit the position. But personally, I would just hold the position because we are following the trend in this case. So yeah, so let's look for examples where you should not take the trades. So you can see in these areas where, although there are no signals, you can get kind of confused. Like here, we have the red and a green, and we have another red here, and you might ask, why do I not take this trade? Because in this case where the momentum is close to zero, it just means that price is neither going up or going down. It might look that it is red, but honestly when price is near the zero line, it just says that momentum is neither anywhere. And you can also look at the CDV indicator. If it's relatively flat, it just means that there's not a lot of buyers and sellers that are controlling the direction of the price. If there's a lot of buying pressure, you can see that the candles or the CDV are bigger, and you can also look at the MADH indicator. You can see that the move up is so much bigger. So these are the type of moves that you like to take. You can see that it turns from green here to red, and this is your signal, second signal to go long. And we look on the CDV, that is green as well, so we enter the position on this candle. So we will put a stop loss right below, and we'll take a 1:1, the same thing. And immediately after, you can see that it turned red and we turned green again. So this green signal is your another position signal to go long, because the CDV is green. So same thing, you take another position like this, and we'll put it right below, and a 1:1. So obviously this strategy works well for your trendy markets especially. So the things that you have to note is just basically how do you avoid the rangy markets and try to pinpoint the trendy markets in order for this to have a high win rate. So basically, as I just said, wait for the candles of the CDV to be big. You can see that clearly there's a size difference from these candles compared to these candles, and when the size increases, it just means that the buying pressure is very high or the selling pressure is very high. Or you want to look at your MADH, wait for it to cross a certain level. Maybe you can set a line at the 0.5 level here, and whenever it crosses the 0.5, you'll take the next signal, because you know that when it's near the zero line, it's ranging and you don't know where price will go. So basically, for the strategy, avoid the rangy markets and try to look for big trends. But even if you trade among the rangy markets, like kind of like these areas right here where it's kind of going up, going down, going up, same thing, and you still can trade it, but maybe your win rate won't be as high, but definitely you'll still be profitable. So anyways, yeah, that is it for this video. I hope you guys enjoyed. This is one of my newer strategies that I've really just tested, and is using one of the most popular indicators right now, which is CDV and your MADH. So make sure to test it out on a paper trading account before you actually live trade this, because you don't want to use real money on a strategy that you're not experienced with. So yeah, that's it for this video. Thank you guys for watching, and like the video if you can, and see y'all next time.